How do you follow that? Uh, but anyway, while this is about can AI be a force for good, this panel is with five VCs sitting here is probably how can we make enough money so that we can contribute to people like Karya. So anyway, I'm going to give a quick bio of the folks here. I'll start off with I'm going in alphabetical. Myself. Lack is the global managing partner at Next 47. He's oversees about 2 billion in committed capital. He's invested in companies like Traction, Vast Data, and Verkada, um, which have AI as the core of their products. He had executive positions at Hewlett Packard and Cisco, and began his career like most of us in the dot-com era. Yeah. Rohini, who's to my left, most importantly went to a really great business school. I went to the same one. She's managing partner at NewBuild Venture Capital, has about 20 years of enterprise investing at NEA, Intel Capital, and NGP. She now runs her own firm. She invests in early stage enterprise and supply chain software companies. AI, obviously, like all of us, is an important enabling trend for her firm. Vani probably needs no introduction. Vani runs Kalaari Capital in India. She was here for 22 years and then moved back. She fundamentally believes that Indian companies are poised to become global brands and was featured and identified as one of the Fortune most powerful women in business. Anand, well, he's a PhD in computer science from Stanford, which was not on his profile, but I put it in there because that's pretty impressive. Uh, he's founded two VC firms, Rocketship and Cambrian. But even better, he's actually two successful startup. One was Jungly by Amazon and Cosmix by Walmart, and he created Walmart Labs. He's also, and this is, he's early investor in Facebook, Lyft, and AppNexus. And he's got a like 10-year best paper awards and has written a popular textbook on the topic of big data. And in typical Anand style, the last line is probably the most impressive. He's the co-inventor of Amazon Mechanical Turk, which has been used by millions of people worldwide. So it's a very esteemed panel. Thank you all for being here. So, you know, is AI a bubble? It's probably something that we hear about every day. So first of all, we will not be talking about like regulatory or ethical issues with AI. I think that's been done. And we're going to talk just about more esoteric things like, you know, which companies are valued correctly and which are not. So there are two sides of this coin, right? You know, one is AI a bubble? Who all have heard of Jeremy Grantham? He's the legendary founder of GMO, but now is what we call a perma bear. I mean, he's always a bear these days. But he had a great line. Everyone is buying these darn chips to facilitate AI. They don't even know what they're going to use the chips for. John Norton, who's a professor at Cambridge and writes in the Financial Times, had a good line. He says, "Are we caught in an AI bubble? Is the Pope Catholic?" And the third is, of course, you know, Gartner, et cetera, you know, have AI at the top of the hype cycle. And then you have Jamie Dimon, who says, when we had the internet bubble the first time around, that was hype. This is not hype, this is real. Goldman Sachs had a big report that says AI is actually not a bubble. So with that as context, I'll start with Rohini. You know, are there some historical precedents or learnings from other technological advancements that can inform our understanding of the current state of AI?
Preetish always starts with very difficult questions, but yeah, good to see everybody here. Yeah, I think you started with some of the examples, like the internet bubble. I think there was WebVan, Pets.com. We had a number of things where I think people do get application layer things wrong when there is an infrastructure build out. And, you know, I was part of in the early 2000s, for example, Cisco had predicted that there would be 50% of video traffic would be, 50% of IP traffic would be video traffic by 2005. And it wasn't. But like if you look at video traffic last year, it was almost 80% of internet traffic was video, right? Whether it's Zoom or Netflix or any of these things. So I think directionally things could be right, but you can have the timing really off. And And I think through all of I mean, this is the Gartner hype cycle at work. And in the long run, we're probably underestimating what AI can do. But in the short term, you can take it for granted that we're probably overestimating what certain linear projections are going to be like. Yeah, you can keep going back from there, all the way to Tulip Mania. But I think the app versus infrastructure pieces of it, I think the infrastructure is probably more predictable. They will use it. You build it, they will come and they will use it over some period of time. The apps, we are probably all wrong about them.
Any other comments? Okay. Let me ask you this question, Anand. How do we balance the need for innovation and exploration in AI with the risk of contributing to a bubble?
So, first things first, right? It's pretty clear from this conference and just the fact that it's completely sold out, for example, being one indicator that AI is hugely important and it's going to transform every sphere of human activity. So that's kind of a given, right? So that's just going to happen. Now, given this, right, I think, so we all accept this, but I'll just quote Kevin Kelly here, who said something very interesting. He said, "Don't mistake clear vision for short distance." Okay, see, these are two different things. Just because you can see something clearly doesn't mean it's nearby, right? So it's going to take time to do this. Now, what contributes to what causes bubbles? Bubbles are caused by lots of capital rushing into things without, where the returns are very far away and there's no clear product market fit. So that's what causes bubbles. Now, in the case of AI, and this is true even in the case of the web, for example, this was true in the case of railways even before that, right? The first people who invested in build railways lost their shirt, right? But railways have been massively good for humanity. And, a lot of the first wave of internet companies, those founders, those investors lost all their money, but it's been massively good for the world because we've created this infrastructure that now the rest of the world rides on. So in the same way, a lot of money, if you think about where the massive amounts of capital are going in the AI space, a lot of it is going into these foundation models, which is the Sam Altman multi-billion dollars that we heard about, or Microsoft or Google, and I think it's a very good thing that these companies are putting all these billions of dollars because they're enabling the creation of a platform that whether these companies do well or not, will be good for humanity as a whole and for the whole ecosystem. Now that said, where we can avoid a bubble is put in the applications of AI, in the app ecosystem. There we can use our discipline as venture investors to look at, is there product market fit? Is there a clear use case? How far away are the returns? Is it tangible? And make investments along, using those criteria. And and that's where, by the way, I think the biggest gold rush is going to be. It's going to be in the applications, right? It's going to be, just like when mobile came around and cloud came around, the big winners were like Airbnb and Uber and so on, right? So the big winners are going to be in the application space, and that's where we as VCs will end up playing. It's not in the foundation model ecosystem.
So on that note, Vani, what do you think? I mean, a lot of these companies like Microsoft putting 10 billion into OpenAI, or Google and Amazon and Anthropic, NVIDIA and Databricks, when you know that the money that they're investing is pretty much going to go back to them, right? So it's kind of round tripping. What's your view on that?
If you have invested in India, I think you would have been hounded by the tax authorities around this round tripping. So if you haven't, so there's a different meaning to this round tripping if you're doing the work I'm doing, which is venture investing in India. But, honestly, that question to me feels completely irrelevant. Dating myself, but I think the first computers, we actually picked the motherboard, put it together, installed DOS, which probably half the people don't know what I'm talking about. Hopefully the other half do. But, we actually installed the operating system and so on and so forth. Just because you own the operating system, just you mentioned Microsoft, or you had early, what should I say, access into Atari or whatever it is, that wasn't the only value creation. In fact, it has been the smallest portion of the value creation, though very necessary foundational building block in terms of what has happened in the last 3 decades, right? So, and I can't afford to put 10 billion into anything anyway. So, somebody is building the infrastructure, and that's not my area of interest. And as you said, there is going to be over the next 2 decades a massive application explosion. Some will win, some won't. Just uh, Telangana government, for example, did experiment with 10,000 chili farmers. Whether you know or not, a big portion of chilies come from Guntur. But anyway, they increased intelligence to those farmers, and they doubled their income, right? And India is a country with a workforce of 50% in farming, 35% in services, right? Although sitting in Silicon Valley or Bangalore, it may feel like everybody in India is working on AI only, but we know clearly that's not the case. So do you look at AI, OpenAI, Microsoft, whatever, or I look at it as what can you do to double income, which doubles then, prosperity, ability to spend, and a country's GDP. And yesterday we had an event where this economist's prediction, 100 years of India, 2047, India will be a $50 trillion economy. If that's gonna happen, then I think the question of how do you increase productivity and wages and equitability of wealth becomes important. And I think there are plenty of opportunities for applications to do that, and hopefully we invest in those companies that are not hypes.
Question for you, Lak.
Yes.
So there's a thing as a temporary bubble and a permanent bubble, right? So tulip mania was a permanent bubble. I think it never went back to those prices. Internet, I would argue, obviously was a temporary bubble.
Yeah.
The question, we are in the business of figuring out which is pets.com and which is Amazon, right? That's our business. So, what do you think about the AI? Is it a temporary bubble or a permanent bubble?
But there's certainly a temporary bubble within a 50-mile radius of this room. And I think that certainly valuations and the line of reasoning that I see very often is, okay, I mean, you can only lose one time your money.
Yeah.
But if you miss the next Google, then you miss making out all of that. And to practically at this point in the evolution, everybody feels it's revolutionary, and we all think that if you put all the pieces together, we can see so many possibilities in the future, and the great build out is happening now. So I don't think it's a permanent bubble. I'm very optimistic. In fact, I think we're all very. I mean, the whole reason that all of us are here and excited to be here talking about this is that we see lots of possibilities that we didn't contemplate even several years ago that are now becoming possibilities. So I'm very bullish about that. But in the short run, this line of thinking, nobody really knows what's going to work in what time frame. So people are afraid of saying, okay, if I lose my money, it's okay, but I don't want to miss out on the winner. And that's kind of creating, I feel this is more of a temporary bubble. And I think it's okay. I think it's good for the founders. It encourages a lot of talent to come into the market. As long as I'm not the one losing money, I'm okay.
Well put.
Can I add to that?
Yeah, please.
So maybe one other thing to add to that is that what it feels like we are playing, there's this analogy of the back half of the chessboard, right? Where if you have a doubling effect, it's the compounding effect of various things happening in parallel, where we feel like there are accretive technologies, mentioned mobile, AI, connectivity with networks, compute, the presence of hardware, the presence of the India stack. All these are kind of co-evolving. And we can already see that these can be additive to each other. And so when people say there's excitement around AI, because it doesn't take too much imagination for you to say that all software will get built this way, all data will get used this way. So I think while the particulars have to be figured out, it is an existing market. It's not the invention of a new market. Crypto, for example, as a counterexample maybe, I think there was this belief that there is an entirely new market, a new way of working that you have to kind of believe in a new way of working, and that feels more precarious than what we are saying with AI, which is additive to everything else we've built so far. So still.
Comments on that? The permanency or anybody thinks this is a permanent bubble?
Well, look, I think there's definitely speculation going on, right? Ahead of actual value creation, but that's, we live in Silicon Valley. This is what we do for a living, right? So, and sometimes you're right, and that sometimes pays off for all the other times you're wrong, right? So.
I had sold my company in March of 2000. And if you're talking about bubbles, then you'll understand what that means, okay? So that was just a month before the internet bubble, and I would love to claim I was genius. I saw it coming, but there is serendipity to life too. And it led the way for me to go back to India and do what I'm doing. But I think the point is, why did that bubble happen, right? And a bubble is really, honestly, an investor's point of view. It's not the consumer's point of view, and it has to do with the lens that you have. If you lose your money, it's a bubble. If you were an investor in Amazon, Google, NVIDIA, you wouldn't have called these a bubble, right? So I think it has to, it's a investor terminology. And the consumers, obviously, whenever you have an embedded technology which gives you 10x or 100x improvement, and today, most of you know there is like 450 million UPI transactions a day, right? And over 800 million Indians use a mobile phone, which costs less than $100, right? So without the internet, none of that would have happened. And to me, at least, I don't even know why we talk about AI as a bubble, maybe because we are a VC panel, and it's a question of which of us, if any of us, are going to lose our money or not. Actually, our LP's money, which we should not lose. But, but and I promise for all those LPs there, I'm not going to lose the money, right? So it's only a Silicon Valley phenomena. It doesn't happen in Bangalore. But, okay. But I think, the real question is, when you have something that's a radical foundational technology, you can call it the printing press or, the Gutenberg or whatever. You move from the dark ages to, a literate, science-based society, right? And I think AI is that kind of a radical foundational technology.
So if this bubble temporarily bursts, and even in the future, what do you guys think? And it's a question for Anand.
No margin loans is what I understood in 2000.
Yeah, no margins. What do you think is the impact of jobs? I mean, there's a lot of fear all over the world, that, AI might take off. If it breaks, what happens? But what do you think happens to jobs worldwide as a result of AI growing or potentially bursting even?
This has, by the way, nothing to do with bubble bursting, right? I think AI is going to transform work, and it is going to put some people out of work, right? All disruptive technologies have this, have disruption, I heard today that potentially 70% of call center employees might lose their jobs because of AI, right? So it's sort of look, the pain that's going to be caused by this disruption is real. So there is going to be, and this is independent of the topic of the bubble or not, right? This, whether this is going to happen, whether the investors make money or not, the transformation is going to happen, right? So I think, but at the same time, it's going to create other jobs, right? So, it was wonderful to hear from the nonprofit Karya just now about how some of those jobs might look like, and how, how the world might shift. I mean, I don't know whether this is a leading indicator or not, but in the most recent employment figures in the US that came out, white collar hiring was down and blue collar hiring was up.
That's the weird thing about this technology.
So
yeah.
I think so we may be seeing early indications of this happening already.
Just to add on to the thought process, so my friend Gokul this morning was just writing on his tweet and LinkedIn that the two most common use cases we see as investors are, we're going to make the highest paid workers, which is the quarters, better, or we're going to try to make the lowest paid workers, which is the customer service agents, go away. This is the most common thing that we see again and again as what Gen AI is going to be applied to. And it's fascinating because one of the questions I have a kid who is in high school, do you want them to study programming? Is almost like, it was not a question people asked. if you're going to end up being a mediocre programmer, maybe you shouldn't study programming, but if you're going to be outstanding, great, is kind of the thing. But so I think the jobs question that you're asking, to me, it's probably a period of flatlining of some jobs before we kind of see the disruptions, because it hasn't yet, it'll take a few years to kind of have an impact.
Yeah, I think, just on the blue collar work, at NewBuild, we invest mainly in the supply chain, in the blue collar workforce. So a lot of the blue collar type work is quite interesting to us, and there's a lot of automation coming there. There are huge labor shortages in blue collar work. So whether it's warehouse employees, truckers, like you can take any of these jobs that have a physical component to them, there's a huge wave of automation coming. And I don't think anybody is viewing that as necessarily a bubble. I think that part of it is viewed, it is here to stay. But even among the white collar work within the supply chain, there's a lot of stuff that is repetitive work, right? So the most common question asked in supply chains is, where's my stuff? And there are like armies of people who are constantly, that's their day job, to essentially go find out where your stuff is, whether it's in a system, or they're emailing somebody, calling a truck driver to say, when are you arriving? Right? These types of jobs, there is a huge potential for AI to disrupt those things. And for a large part of them, it will feel like a value add to their day. It will feel like a co-pilot. And those things are not substitutes, it will be an addition. But there will be things that, to Anand's point on customer service, for example, there was the Klarna case. I think they essentially replaced 700 customer service jobs in Philippines with essentially AI-led, onshore.
I wonder what they did to customer service, though.
Yeah.
I mean, wonder what the quality. We haven't heard that yet.
We haven't heard that yet.
But okay, I'm getting a sign that's 5 minutes to go.
Yeah.
So we'll have a little bit of fun, and then we'll have a couple of questions. So here's the fun. I'm going to ask all these esteemed investors. I'm going to give them the name of a company. I'm going to give them the valuation, and we'll ask them whether they'll buy or sell.
Buy or sell.
Okay.
Long only.
Right? Ready? Okay. NVIDIA, 2.2 trillion. Buy or sell, Rohini?
Not buy, I'm long only.
So that's long. Okay,
Yeah.
that's buy. Okay.
Sell.
Sell.
Sell. I think it's a one-time blip. They're the Cisco of
Cisco.
the.
I said not buy.
Not buy.
I said not buy.
You said hold. You said hold.
Okay. What are you doing? Are you buying or selling?
Me?
Yeah, you.
I'm holding. I don't have the guts to sell, and I don't have the guts to buy. Okay. Google, 2.15 trillion.
YOLO, baby. Buy.
Buy.
I'm a buy.
Google, Vani.
When somebody was talking in the earlier panel, and sorry, I know you want a one-line answer, but I remember Google went public at 10 billion.
Yes.
And they had a lottery, if you wanted to, anybody in the Valley at that time remember? And they had a lottery for you to buy in the IPO. I was like, gosh, who buys anything at 10 billion? Yeah. That's what I thought, right? That wasn't that long ago. But now I would say buy.
Buy. Black?
I'm hold on Google.
Hold on Google. Rohini?
I'm a buy.
Buy on Google. All right. Microsoft, 3 trillion. Black?
Buy.
Sell.
Buy.
Rohini?
I'm a sell.
Wow.
Antitrust.
Okay, my favorite, Supermicro, 50 billion.
Did it already come? That's after it came down?
And it went up again. But what do you think at 50 billion? 750 bucks.
I'm not a public market investor.
No,
I
I
know.
know.
Say,
I'll
nobody take
I'm
this to
getting
the
to
bank.
private markets. Give me a minute.
I think I'm a sell on that.
Sell.
I first have to raise a hedge fund.
Okay.
I only have a venture fund.
I'd sell at that price.
Agreed. Okay, now the fun part, private markets. Anthropic, 15 billion. Tesla, no. Tesla is Elon. That's a different issue. The question is, would you buy XAI at 16 billion, right? I mean, that's a different.
I don't know whether they'll let me invest.
If you had a choice today at 15 billion.
Can you get me in?
I can get you 15 billion.
15 billion, I'm not sure, to be honest.
Okay.
Sure.
I'm with you on that.
No.
No,
So we did pass on that.
you did pass on 15.
You want to stay past?
Yeah.
Yeah, pass.
OpenAI 80 lakh. Billion, huh, by the way. Everything is billion.
80 billion.
Yeah, everything is billion actually. Sheesh.
Yeah, 80 billion.
Yeah.
Okay. I would probably hold.
Sell.
Yeah, I definitely hold. But
Rohini?
I think that's a hold.
Okay. Jasper 1.5 billion. I'm giving you guys a layup now.
Oh, that sell.
Yeah. Okay. Moving on. Okay. Perplexity went from 121 million to 2.5 billion in 1 year.
Buy.
buy.
Go IIT Madras.
Yeah.
Good. Same reason, same reason.
Okay. Okay. The non-IIT Madras folk. Gindi and Osmania. Let's go with that.
I'd probably buy at that valuation.
I agree.
Wow. Okay. Glean at 2.2 billion. Enterprise search. 2.2 billion. No? No point of view. Pinecone at $1 billion. Lakh.
I'm getting to a pass on at that price on vector databases in general.
Thank
I
you.
might have bought 6 months ago. My answer might have been different.
Anybody else view on Pinecone? Rohini?
Don't know.
All right.
But yeah.
So here's, you'll get what you paid for with this advice. So, questions? Yeah.
Well, I think that this definition of incumbent, Xerox PARC must be the most successful tech company in the world, right? To some degree, there's this, it's not to say, even if they create the technology, they're the ones that are going to win on the other side. That's kind of at least how I think about it.
You know, Netscape browser, I used to like fixing bugs because if you reported the bug, they paid you, and it was accepted, they paid you $100, which was the cheapest way for anybody to do QA, but it was like pride that I found a bug in Netscape or whatever browser. But, you know, and I hated Internet Explorer. Does it matter? Exactly.
Yeah, hi. So the term AI was coined around 1956, right? John McCarthy and his friends at Dartmouth. And by the way, folks here may be happy to know John McCarthy loved Indian buffet. He was an advisor to my company in 2006, and we used to go to Darbar at Lytton Avenue. Check that out. So the question I had is, would you say the question is AI is a bubble, or there are multiple bubbles with different aspects of AI? And each of them have their Gartner curve. So how would you think of that, each of you?
You know, the word AI has been a moving target from McCarthy's time, right? They used to be defined differently. And the way we used to say was, when something started working, we'd stop calling it AI, right?
Yeah.
So that used to be so that used to be the definition of AI, right? So yeah, so it's changed a lot. And to your specific question around multiple aspects of AI, I think it's all kind of at least in the private and public market, there are the LLMs and the generative AI, and there's the traditional, sort of predictive AI, right? And these two are, and many companies are actually using them together right now. So it's hard to say separate it out and say there are separate bubbles and so on, right? That's right. Yeah, autonomous cars was a use case where they mistook clear vision for the distance thing, right? So that
The predictive. I think that's yeah. So predictive AI, I think, is the least bubbly of the lot, and I do think that computer vision, for example, which maybe the autonomous parts of it are more bubbly than others or more speculative on the application layer, but a number of the other parts of computer vision are now proven. But visual search, I think somebody was talking about visual search even in an earlier presentation here. Like visual search has been tried for the last 15 years and with various levels of fidelity. And so I do think many of those are quite well-tested technologies. I think the Gen AI excitement, the new thing has been that unlike a lot of other previous generations of AI technology, there has been a separation from kind of the data that trains the model versus the task that it can work on. Like, so that direct relationship has been cut. So Gen AI looks more like a skill development, which is why it feels more generalized. So anyway, that's why it's most bubbly.
Sorry, the big boss is telling me that we are done. So thanks, MR. Thank you all. Thanks.